Very good evening and welcome. You're watching Beyond the Headline with me, Tamanna Inamdar. This is the show where we take the top headline of the day and break it down for you, down to what the facts really are. Today we're going to pick up a headline that has been dominating the news cycle for quite a few days. That is what has been happening with the stocks of Adani Group companies. Today, that entire stock rout reached Parliament with opposition demanding a debate on this in the Rajya Sabha. They want a probe as well. Now, you will be seeing various views floating around on social media, etc. And they will probably differ depending on the outlook of the people sending them or putting out those views. But today, we're going to stick to the facts and leave you to take the decision on what you believe is going on with this very important story. So let's begin. But first, let's look at the headlines at this hour. Adani Rout storms Parliament. Opposition demands probe, says hard-earned money of crores of Indians endangered. Times Network accesses Enforcement Directorate's supplementary charge sheet in Delhi excise policy scam case. Agency claims cash used for Goa campaign by Aam Aadmi Party. Delhi Chief Minister refutes charges. Big relief for Noida home buyers. Top court comes to the rescue, allows the government-appointed board of Unitech to submit its revised layout and building plans for nearly 10 projects stalled across Noida. New day, new face-off in Didi's Bengal. Visva Bharati Central University's Vice-Chancellor says he's better off without Chief Minister Mamata's blessings. Bengal BJP accuses the Chief Minister of politicizing the issue. IMF rejects Pakistan's revised debt management plan, calls the plan unrealistic and based on wrong assumptions. And Times Network exclusive with tennis superstar Sania Mirza. Mirza won a silver in her last Grand Slam but says she will never ever leave tennis. Adds that tennis is in her blood and taught her to keep fighting. Watch that full interview ahead on the show. The biggest headline in the country is what is happening with the stocks of the Adani Group of companies. The infrastructure giant has faced rough weather over the last 1 week, and now the issue has reached Parliament with opposition leaders demanding a probe. Today on the show, we're going to explain what exactly the story is by simply putting facts on the record. Let's begin with what has happened today. Adani Group stocks were hammered in trade once again today after the company announced that it was withdrawing its follow-on public offer or FPO late last night. An FPO is basically a way to raise money from the markets by giving more shares by a company that is already listed in the stock markets. The FPO in this case was for Adani Group's flagship company, Adani Enterprises, and was meant to raise 20,000 crore rupees from the market. As of yesterday morning, the FPO had sailed through with one category of investors, including family offices of large Indian business houses and Abu Dhabi-based funds investing in it. This category is called NII, non-institutional investors. So this one category made up for enough of all of the FPO. Despite this, it was called off. Why? Simply because the FPO sold shares of Adani Enterprises as high as 3,112 rupees per share, and when markets closed yesterday, the value of each share had fallen to 2,128 rupees. That means investors who subscribed to the FPO had paid more than what the stock was valued in the open market. Now, Gautam Adani, chairman of the group, put out a statement today explaining why they had withdrawn the FPO. Listen in.
Dear friends, after a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO.
Now, this statement did not stem the further hammering of stocks in the Indian markets today. By now, the Adani Group has lost a market cap of $100 billion in 5 trading sessions. So, why is this a political issue being raised now in Parliament? That's because the Hindenburg report, which started off this chain of events, released on 24th of January, made serious allegations against the Adani Group and posed 88 questions. Now, the Hindenburg Group is a research firm who are short sellers. That means they put out a report and they take a position which predicts that the stock price of that company will fall. And they have said in their report that they're taking short positions on Adani Group companies and on this FPOs. They essentially claimed that the group was over-leveraged. That means it has too much debt, that the group overstated profits, and they manipulated their stock price. Now, while the report caused a major flutter, the Adani Group hit back, questioning the timing of the report, alleging it was meant to torpedo their FPO that was to open just 3 days later on the 27th of January. They refuted the charges, in fact, in a detailed response of over 400 pages released on the 29th of January. However, this response also did not calm investor fears, and the stocks continued to be sold heavily. Now, the concern that the opposition leaders are talking about is that Indian institutions like LIC, State Bank of India, and other public sector banks have lent money to companies in the Adani Group. Hence, the demand for a probe. Listen in.
भंवरे ने खिलाया फूल, फूल को ले गया हिंडनबर्ग। 20 साल की मेहनत मोदी जी की, जब मुख्यमंत्री थे तब की मेहनत, जब प्रधानमंत्री बने तब की मेहनत, इतनी मेहनत करके मोदी जी ने एक गुब्बारा फुलाया, फुस हवा निकल गई।
आज हमने 267 नोटिस दिया था और यूनानिमस यही राय थी कि ये देश का बहुत महत्वपूर्ण मुद्दा है, जहां पर जनता का पैसा जो लगा हुआ है स्टॉक मार्केट में लगा होगा, LIC के माध्यम से लगा होगा, SBI के माध्यम से लगा होगा, वो कल रातों रात कौड़ी के भाव हो गया। जिस तरीके से 1,40,000 करोड़ का मार्केट कैपिटल कल खत्म हुआ है और अदानी ग्रुप को मजबूर किया है FPO वापस लेने के लिए, वो देश में चर्चा उसकी होनी चाहिए।
जो भी समस्या है, जो संसदीय परंपरा है, संसदीय परंपरा में राष्ट्रपति के अभिभाषण के धन्यवाद प्रस्ताव में कोई भी विषय लेके आप अपने विषय रख सकते हैं, अपना आर्गुमेंट रख सकते हैं। तो इसीलिए मेरा स्पष्ट मानना है, सदन सुचारू रूप से चलाने के लिए मैं उनसे प्रार्थना करता हूँ।
Okay, so how has one of India's largest conglomerates found itself in the eye of a storm in just a matter of days? Is this a concerted attack? That's one of the conspiracy theories. Or is there merit to the charges? To speak on this, I am joined now by Subhash Chandra Garg, former Finance Secretary of India. Lloyd Matthias, business strategist, is with me on the show. Madhavan Narayanan, senior journalist. And Basant Maheshwari, investor and author, is also joining us. Welcome to all of you, and thank you so much for joining us on Beyond the Headline. I'm going to begin with Mr. Basant Maheshwari because a lot of this story is coming from how stock markets are responding to these events. The headline being dominated is how the value of these companies in terms of market cap have been completely hived up. Mr. Maheshwari, put into context for our viewers why this is happening and what it means. Does the fluctuation in stock market price of a company or a group of companies or any listed scrip mean that something is right or wrong? Explain that for us.
A normal movement when the entire market is collapsing and a certain stock is collapsing doesn't deserve so much attention. But when the entire market and the entire globe is on one way and a certain set of companies are coming down on another, it forces you to sit back and think that there is something not particularly orderly about what's happening. And before I say this, I would like to say that the stock market prices events based on perception, at least in the very short term. So if the market feels that there's something wrong, the onus is on the other guy to come and prove that there's nothing wrong. And meanwhile, till the time he comes and proves, the market keeps on hammering the stock. And stock market hammering cannot be stopped by regulations, cannot be stopped by government, cannot be stopped by exchange or the SEBI. Because if that would be the case, the stock markets would never have fallen. They would have just gone one way up. So that's for the perception side of it. But fundamentally, the issue remains that the Adani Group is deeply leveraged. They wanted to get the FPO and repay off the leverage to some extent. I mean, 20,000 crores was not enough, if you ask me. They had to deleverage at least 50, 60, 70, 100,000 crores. And the moment the FPO didn't go through to whatever extent, I mean, the market on budget day started punishing the Adani stocks down from 28, 2,900. It was at 28, 29 till the time the market thought that this money is going to come in either from friends and relatives or from overseas corporates. But the moment the market the market normally gets a sense earlier than everyone else. And that's when you realized that the stock started falling from 28, 2,900 from budget day. And then the next day, the FPO was withdrawn. I think the market got a sense that the FPO is being withdrawn. And when the FPO is withdrawn, I mean, the leverage problem remains. So I think that's the real issue. The company has to deleverage itself if it has to survive in these kind of situations.
So when you say deleverage, and that means the company has too much debt, it has to reduce the amount of debt. This is a complex story which people are just deciding on depending on whatever headline they read and understand. So I want to take the time to break it down. So bear with me on that, and thank you for that, Mr. Maheshwari. So essentially, the issue that the market is looking at, everyone is looking at today, is this is a group that has grown very fast and has taken a lot of debt to do so. This is also something that the Hindenburg report talks about, but it's not an allegation they're making it. They're saying that, look, this company has a lot of debt. The Adani Group says that we are rapidly reducing our debt, and this is not just our company. A lot of companies grow this way. Can you put that into perspective, Mr. Maheshwari?
Whenever a company or a person or anyone wants to grow in life, he cannot grow with his own limited capital. You have to take debt, and that's how companies have grown across the globe. I mean, Elon Musk grew out of debt. He was almost going bankrupt in 2006, 7, 8. He survived and went on to become the richest man in the world a few months back. So taking debt is not a problem, but not being able to repay that is a problem. If you all recall, Tamanna, in 2008 or 2007 end, Adani Ambani Group was deeply buried under debt. It wanted to deleverage itself. It got R Power as an IPO at that time. It had RCom listed, R Capital, Reliance Capital. They were all in the pipeline, and the Lehman collapse had already happened, and the stock market collapsed, and he couldn't deleverage. And what happened after that? Adani Ambani came down from the moon right to Mother Earth. So this is a very complex situation. The entire world, which includes, peer groups, the government, the opposition, the normal public also, they keep watching you when you grow with debt. They say, okay, keep on taking the risk. But the moment you want to deleverage yourself, that is when you encounter the biggest problem, because you have to have so many situations and scenarios in your favor at that time. You need to have a conducive market. You need to have a story which people would be willing to believe. You need to have a normalized environment. In this kind of an environment where there's so much of talk going on about how the Adani Group has corporate governance issues, it makes it more difficult for it to raise debt. So I wouldn't like to compare one group with another, but had it been a Tata Group, then it wouldn't have faced so much of an issue. But because the Tata Group doesn't have a perception issue. So right now I'm talking about perception. I'm not saying whether the issue exists or not. That's for the court of law to decide and not for me to say. So the perception was a problem. The situation was a problem. And I think and the price was hammered down just before the FPO was about to start. The Hindenburg report came through. So we might discuss and debate whether the Hindenburg report is right or wrong. But there was some action to the entire thing that was pre-planned. So it's a mix of everything, the way you want to look at it.
Yeah, so the Adani Group has said that the timing is suspect. And the Hindenburg Group is very clear that they are short sellers. So there is no hidden motive. They have put it out ahead of the FPO. Now, conspiracy theories are abounding, and frankly, we're not going into conspiracy theories today because we have no information on this. What I wanted to make clear is that when you say deleverage, that means a company trying to reduce its debt. Many companies take debt to grow, but that's not the issue here, is it? SC Garg, why this has become a big issue today is because of the other allegations that the Hindenburg report has put out in about 88 questions. Then the Adani Group put out a 413-page report and they said they've answered it. Hindenburg Group again says, no, I am not taking, your answer at face value. This is not a relevant answer, etc. That back and forth is going on. The question mark being raised by the opposition today and by watchers, etc., investors is that are Indian institutions robust enough to have seen any misdoing if there was? Right now you have one agency which is making, one research firm which is making these allegations. Isn't the real question on Indian institutions?
See, the group is majorly present in the infrastructure sector. That's a very difficult business to be in. And there is very large involvement of the government across the entire infrastructure segment, whether you are in the electricity generation or coal or whatever. And the finances in the country there is a very large public sector banks, there are insurance companies which are in the public sector. So there is a lot of enmeshing of the public institutions with the market for the equity as well as for the credit. That is where the story, to my mind, gets complicated. When the going was good, the group was able to raise its valuation to very high levels, unrealistically high levels. And the institutions believed that its business supports that kind of valuations, and then institutions like LIC, SBI and others kept on providing them equity support as well as the credit. But when you become over-leveraged and you become overvalued, then you become also vulnerable. That's what the vulnerability which Hindenburg Group has exploited, and exploited very effectively. And that story became credible, and that's why you find this kind of behavior in the market where it's completely reversed. So much of confidence to build the stock prices up, and now complete lack of confidence. Nobody wants to invest at this time. People want to only sell. So to come to your question, where the institutional involvement is, I had this sort of feeling that our institutions are not very well equipped with research and all. They go more by the larger story of the government involvement and the business being protected returns and those kind of things. And they perhaps made a wrong assessment about the kind of viability of their own lendings and investment which they were making. But this may be premature. We'll need to watch a lot more. But what I see right now, the way the foreign institutions have sort of degraded the bonds and have declared them not worthy of collateral. So this group has raised a lot of money.
Mr. Garg, just on that, I want to just talk about that. You're talking about two reports which were put out by two international wire agencies. One claimed that Credit Suisse is not giving any loans against Adani bonds and they valued them at zero. There was another report today which claimed something similar with City Wealth. I have not yet seen a statement from either of these two bankers. And one would assume ordinarily that if there is such a big claim, there would be some clarification or statement on it. So, which is why we have to figure out what is really going on in the story. As of now, the question is that why has the impact of pricing on the stocks of a company in the equity markets become a national issue? I want to just play out for you what Dinesh Khara of State Bank of India told us when we asked him exactly this question. The concern obviously is State Bank of India, largest bank of India, you've lent to Adani Group, what is going to happen to your money? Simply put, listen into what he said.
We have not experienced in the past any kind of a default from this entity, and we don't expect that we will have any challenge because the assets are having very robust cash flows. So as far as our lending is concerned, we don't envisage any problem. We don't expect that any kind of pressure on the group companies as far as the liquidity is concerned and as far as their ability to honor their commitments are concerned.
Okay. Essentially saying that when you lend to a company, you lend on their physical assets, you lend on their, whatever their credit history is. You're not lending on the stock or where the stock is going. In all of this, Madhava Narayanan, the most, I would say, alarming and sharpest allegation from Hindenburg seems to me, and correct me if I'm wrong, on the charge of stock manipulation. They are claiming that the stocks of this group were pumped up by the group itself in a roundabout way. Do you think there has been an adequate response to this, and how do you see the story moving forward?
Well, I'm glad you asked me that question, Tamanna, because this is probably the most critical aspect from the point of view of forensic look into the valuation of the shares. You can always talk about, you just saw the SBI chairman talk about cash flows, which is a normal debt-related thing any bank would do. But shares are where the real game is at, partly, and how the share prices are fixed by the market or perceived by the market is a matter of research and analysis from various angles. And that includes corporate governance as well as legality. Please, I need to put them separately so that we understand it with excellent clarity on why. Corporate governance is a matter of quality and good behavior, whereas legality is a non-negotiable, So, and shareholder value is a matter of perception. So legality, corporate governance, and shareholder value can be analyzed in 3 silos and then put together. And that's what an intelligent market will do. In which that is why auditors are important. That is why law enforcers are important. That is why media is important. That is why parliamentarians are important. That's why this issue requires a probe from all angles. Now, to typically critically answer your question, the Hindenburg report mentions shell companies. Now, that's what this government is supposed to be fighting since demonetization. Now, 4 countries, Caribbean, why is an infrastructure company having so many investment companies de facto controlled by the same family, having audit trails that are not visible and signed off by auditors who are 20-something or 23, 24, would rather, as somebody said, where people would be finding difficulty in getting management trainee jobs. This is the kind of scenario in which some kind of, I'm using the word very carefully, some kind of round tripping has been suggested by the Hindenburg report. So typically, this is a matter for the enforcement directorate to probe. Or if there are too many clusters of companies effectively leading up to the same family, from a corporate governance perspective, we need to ask, why is there so many companies? What have they got to hide? Why are they shuffling so many balls? So even if it's all legal, it's important. And if they involve overseas companies from tax havens, that raises even more questions. And that is why this price manipulation allegations need thorough investigations from various angles. Like I said, all over again, shareholder value might be simply debt related or earnings per share related, balance sheet related. And there are long-term, short-term issues because the Adani CFO has been saying...
So let me understand. So there is perception, there is corporate governance, that means how you run your company, and then there's the question of legality. Now, the response to the allegations of share manipulation that the Adani Group has given is that any investigations that were taking place have been closed, they have been addressed in court, and all of that information is in the public domain. There is nothing new that is being claimed today. So they've given a detailed response. We have to see if this goes further in terms of an investigation. Lloyd Matthias, what does this really mean in terms of how things can change so quickly in a matter of a week? It's actually just about 5-6 days since all of this has been going on, and Hindenburg, which was little or not known at all, is suddenly in the eye of the storm. A group which was, hitting headlines for newer projects, etc. The leader becoming, one of the wealthiest people in India, etc., is suddenly under fire. How do you see all of this changing so very quickly? Is this just a coincidence that all of this has happened in the last few days?
Tamanna, I don't think it's a coincidence. I think clearly in terms of timing, there seems to be clearly a, not just something out of coincidence in terms of timing. However, while the issue has been discussed in terms of, some of the larger areas, the area that I think is a big concern, both for investors and for the country in general, is that this issue yet again has put the spotlight on poor corporate governance. The impact and the bloodbath has been larger in markets just because of the weight that Adani stocks have on the markets. And the fact that there are a lot of core areas like cement, steel, cement, ports, and such like. So I think that's why the impact has been larger. But I think the bigger challenge and the bigger concern for the country in general is that this yet again has put the spotlight on poor corporate governance by Indian companies. And the tragedy of this whole issue is just that when India is seeming like the golden, the El Dorado, right, with all the issues around China and their handling of COVID and other such leadership issues, I think just when India was emerging as, let's say, a safe haven for a lot of global investors, I think yet again this has kind of put a question mark on it. And coming on the back of things that we've seen in the recent past, starting with, let's say, the ICICI Bank issue or going way back into the past, Satyam and Ranbaxy, I think this doesn't speak very well in general for corporate India. On the positive side, I think what's going to happen and what I really believe will happen, aside from the short term or the limited term bloodbath, I think this will make corporate India far more conscious about the need for good, clean corporate governance and for being far more transparent, right? Whichever way it works, I think that's one area. The second, I think, is really the onus on our regulation agencies. Having let this go so far, why did it take the Hindenburg report for us now to be, kind of scampering and then, SEBI asking a few questions? I think a lot of this ought to have been screened earlier. And I think the moment our regulation agencies get on top of things, I think it will work well. So in the long term, this is going to benefit and clean up.
So we are assuming. So we are assuming that what Hindenburg is saying is correct when you say that why have agencies not been doing this so far? We don't know that yet. We don't know if what Hindenburg is saying is correct. We don't know if what Adani is responding is correct.
Yeah,
right now we are in the range. Right now we're in the space of allegation and response. Yeah, and then how everyone else is responding to it.
Yeah, but a lot of what the Hindenburg research is pointing towards is a lot of matters in the public domain, right? They've collated it all together. The fact that there have been shell companies which have interested parties, I think is something that they've actually pulled together. The fact that the group is over leveraged in overall in terms of versus their revenues, I think that's in the public domain. The very fact that they pulled it all together right now and showcased the whole thing, timing being more than just coincidental, I think is certainly questionable. But my point is, a lot of these issues, given the size and the power of the group and the fact that they operate in a lot of core areas, I think it required a lot more vigilance from our regulation agencies. So, but I'm not saying that the group is in the wrong.
Vigilance from regulations and first things first, because we have reported that the RBI is now looking into what the exposure of banks is to Adani, what kind of collaterals there are, etc. Basant Maheshwari, you've heard everyone's sort of comments on this issue. And we are trying to, figure out what's really going on apart from the fluff. The biggest trigger to me, which has started this conversation and raised concerns, is how the stock price is faring. In a sense, the action of investors, whoever they may be, of selling the stock in such large numbers and the nosedive that the stock price has taken has become a proxy for whether this group is actually telling the truth or not. I want you to sort of clarify what it means when a stock nosedives. Is it at the end of the day a certification of what that group stands for?
Tamanna, when a stock nosedives and the entire market is nosediving, I can ignore a stock and say, just because the market is falling, this particular stock is also falling with the market. So,
right.
AAA rated companies like a Bajaj Finance would have fallen 65% in 2020 March because the entire market was collapsing. In 2008, you have seen how ICICI Bank and SBI fell 50-60% because the entire market was collapsing. But when a particular stock collapses, when the US markets are on a recovery path and the Indian markets are 5% away from all-time highs, you should sit back and think and then understand what the situation is like. For example, if I just throw a number at you, the Adani green bonds, which trade at Frankfurt, have a yield to maturity of 23-24%. So 23% yield to maturity means that there is a fundamental problem that investors might not be able to get back all that they've invested in those bonds. So those bonds are telling you that there's a problem, and the bond market is supposed to be more smart than the equity market. So overall, if you don't hold a gun to my head, I would say there is a problem because the stock market would have fallen for 1 day, for 2 days, but it's been a week, it's been 10 days. And plus they were not able to get the money for the FPO also. So I think the fundamental vulnerability of the group came because it was over leveraged. Now assume that the group was not over leveraged, assume that it would have been debt free, then no matter of reports would have done anything to them. Let me tell you that, because you wouldn't have been able to frighten anyone. It's because a debt-free company can never go bankrupt. And this is just away from the context, just to explain what debt could mean in this kind of a situation. And when you have debt, and when your bonds trade at 23-24% yield to maturity, and when you go to rotate this new debt, this old debt for a new one, how can you pay 20-23% yield to maturity on the new debt?
So Basant Maheshwari, there is no gun to your head. I know you said that in a light tone, but there's no gun to anyone's head. We want to understand. So, is it correct to say that equity investors have figured out something and have looked at all of the information right now, and they're not liking what they see? And which is why the stock is being dumped. It's not that everyone is just, getting on the bandwagon.
Yeah.
Is that correct?
Yeah. Equity investors, is that question for me?
Yes, for Basant Maheshwari, yes.
Okay, so equity investors can be stupid for a day, for 2 days, but for 1 week, you've been hammering a stock down and nobody's coming to buy it. So if LIC wanted to buy the stock at 3,000, why don't they buy it at 1,500? So nobody wants to put his hand to it right now. So I think that tells you more of a story than anything else.
Yeah.
Okay. I know, Madhavan, you want to come in on this. I want to come in on another aspect, which is probably one of the things that people are saying on social media. All of our viewers maybe are reading or hearing that this is all a conspiracy theory and it's an attack. It's an attack on an Indian company. It's an attack on, a large Indian company which is creating infrastructure for the country, and there is a deeper push to it. How do you sift fact from fiction at a time like this? Because that narrative sounds also interesting. Definitely the timing is a little suspect. You've come out with a report 3 days before the FPO in time to tell investors what you think is happening. But what about these conspiracy theories? Yes, Madhavan.
Yeah, I think conspiracy theories, as far as I go, are part of the spin doctoring or the perception building exercise. I would discount it. I would rather look at the facts, because what I would want as a journalist is transparency and facts, and not merely broad brush statements that everything is in the public domain. Because if there are shell companies involved, if there is overvaluation of stock involved, and if there is a leveraged balance sheet, in that case, you're asking for trouble from any serious valuation experts, and therefore what I would want is transparency. And my favorite example always is of the Sherlock Holmes story of the dog that did not bark. Now, most of the private domestic mutual funds have very little exposure to Adani stock. In spite of the meteoric rise for the past 3 years, we need to ask why. What is it that they knew that LIC and SBI did not, from a point of view of rational valuation of shares? You cannot be playing the game like a Wall Street trader and talking the language of Warren Buffett. So that is one question. Let me also bring in a very interesting nugget from history, Tamanna. This is not the first time this is happening in Indian corporate history. In 1982, a bear cartel tried to hammer down the shares of Reliance Industries when Dhirubhai Ambani was at the helm. And interestingly enough, it was at the time of a convertible debenture issue, which was nothing but a follow-on public issue of those times. And Dhirubhai was smart enough to order through his friendly network of NRIs the purchase of all the shares that were being unloaded in the market. The bears ran for cover and the stock ran up. And let me also throw in one more interesting nugget that as late as 1986, Reliance Industries was a debt-free company, which is where, to quote Basant Maheshwari just now, if you're debt-free and if you want to put your own money where your mouth is, you have nothing to afraid. If you're over-leveraged and you're politically seen as connected, you are jumping into a place, an infrastructure sector where angels fear to tread, and then you have corporate governance issues based on shell companies. Don't expect journalists and bureaucrats and parliamentarians to sit and clap just because you're wearing a tricolor flag on your lapel. I'm sorry. This is
Basant Maheshwari, just on the question once again of debt, because leverage is coming up again and again on this. I want to get a bigger and broader context. In corporate India right now, especially in the infrastructure space, is it unusual to have debt on your books to this extent?
Debt is not unusual.
Basant Maheshwari, that question to Basant Maheshwari, please.
Okay, sure.
Infrastructure is a very difficult business to be in. Subhash Chandra lost his entire empire because he wanted to do a little bit of infrastructure. So because the cash flows come with a lag and the money has to be put up front, the debt has to be serviced. So all the Adani Group companies, except for Wilmar, to whatever extent you might say, have long gestation period. Like if you buy out Bombay Airport, you have to pay up the money up front. And then you make those changes and the airport pays you back over years. Adani Green, 5 years, 7 years gestation period. I mean, a port is doing well, it's throwing cash back. So all these businesses have, in banking terms, what people would say, have an asset liability mismatch. Your assets have to be bought upfront and your liabilities have to be serviced right from day one. And the asset pays you money slowly and steadily. And when you grow faster than your return on equity, and by logic, infrastructure companies don't have a very high return on equity, you have to rely on debt. So ultimately, I mean, in hindsight, we can say it was a bad strategy to expand on debt. But then when your return on equity is smaller and your growth is higher, that debt is the only option. But my problem is, this company was not allowed to get rid of debt. Had it been allowed to get rid of debt, I think corporate governance or no corporate governance, it would have survived. But right now, it's in a whirlpool kind of a situation where retailers, and one thing I would like to tell you, Indian mutual funds haven't bought the stock, but Indian retailers have bought all the Adani companies, 5 shares, 10 shares, 15 shares, 3 shares, 7 shares, because everyone wants to buy a stock at 1,500 once it's fallen from 4,000, rather than buy it at 1,500 on its way to 4,000. Because you want to buy something which is cheaper today when compared to yesterday. And I think that's where the entire crowd will get sucked in.
Okay, so a lot of questions for investors. They will be looking at this very carefully, but this is a story that has so many aspects. It's now being raised in Parliament. We'll have to track what happens next in this entire saga. But for today, I want to thank all of you for joining in and breaking down what exactly is going on. That's the first step to really start when you're trying to understand these headlines that are unraveling. We'll take a very short break at this point, but on the other side, we have an